What if one family could consistently beat Wall Street for over 50 years, while most investors chase trends, panic during crashes, and celebrate short-term wins? The Davis family quietly built one of the greatest long-term investing records in history. In today's video, we'll uncover 7 timeless investing lessons from the Davis dynasty by John Rothschild. Lessons that can help you think like the world's best investors. This is Wisdom Lab. Let's begin. 1. Think in decades, not days. The Davis family believed that wealth isn't created overnight. Instead of worrying about daily stock prices, they focused on businesses that could grow for decades. Markets fluctuate every day, but great companies continue creating value year after year. Lesson: stop asking, what will happen this week? Start asking, where will this company be in 10 years? 2. Buy great businesses, not just cheap stocks. A low-priced stock isn't always a bargain. The Davis investors searched for companies with strong management, competitive advantages, and consistent earnings growth. A wonderful business bought at a fair price often beats a mediocre business bought cheaply. Lesson: quality matters more than price alone. 3. Let compounding do the heavy lifting. Albert Einstein reportedly called compound interest the 8th wonder of the world. The Davis family proved this principle through investing. Instead of constantly buying and selling, they allowed successful investments to grow for years. Time multiplied their returns far more than frequent trading ever could. Lesson: patience is one of the most profitable investment strategies. 4. Ignore market noise. Every year, financial news predicts crashes, recessions, or booms. Most predictions are wrong. The Davis investors avoided emotional decisions based on headlines. They focused on company fundamentals rather than market opinions. When others panicked, they stayed disciplined. Lesson: don't let daily news control long-term decisions. 5. Concentrate on your best ideas. Diversification is useful, but over-diversification can reduce outstanding returns. The Davis family preferred owning a carefully researched collection of outstanding companies rather than dozens they barely understood. Confidence came from deep research, not blind optimism. Lesson: know what you own and why you own it. 6. Every crisis creates opportunity. Economic downturns scare most investors. The Davis investors saw them differently. Market crashes often allowed them to buy exceptional companies at attractive prices. History shows that fear eventually fades, but quality businesses continue growing. Lesson: great investors prepare for opportunities during difficult times. 7. Successful investing is mostly about behavior. The biggest enemy isn't the market, it's human emotion. Greed causes investors to buy too late. Fear causes them to sell too early. The Davis family stayed calm, followed their process, and trusted long-term investing. Their emotional discipline became their greatest competitive advantage. Lesson: master your emotions, and you're already ahead of most investors. Let's quickly recap the 7 lessons from the Davis dynasty. 1. Think in decades. 2. Buy great businesses. 3. Trust the power of compounding. 4. Ignore market noise. 5. Focus on your best ideas. 6. Turn market crises into opportunities. 7. Control your emotions. These principles helped build one of Wall Street's most successful investing dynasties, and they remain just as valuable today. If you enjoyed this summary, don't forget to like, subscribe, and hit the notification bell for more book summaries that make you smarter in just a few minutes. Thanks for watching, and remember, invest with patience, think independently, and let time work in your favor.